And cost segregation is, we don't need to get into the weeds on this, but cost segregation is one of those things that allows you to use accelerated depreciation. And depreciation is something that's a tax write-off. And the way I explain it to people is years ago in the first Trump administration, there was a young man by the name of Jared Kushner that people might have heard of that's married. He happens to be the son-in-law of Donald Trump. He's married to Ivanka, right? And what's interesting is the legacy media, the liberal media was mainstream media, whatever you want to call them. They were excoriating this kid and his family for not having paid any income tax for years, for decades. What's interesting though is they did that by owning real estate and specifically by owning apartment complexes, right? And what that does is the total cost of that improvement is depreciated in residential, like regular residential depreciation over a 27 and a half year period, right? So if it's $1 million improvement, you can't depreciate land, but if it's $1 million improvement, you basically spread that $1 million over 27 and a half years. That's a write-off on your taxes. If you have enough of that as a write-off, you literally can have tax-free income because your income is sheltered from taxes because of the depreciation amount. Okay. Cost segregation isn't any more than a way to use accelerated, what we call accelerated cost recovery, right? It's a fancy way of saying depreciation, but it's accelerated tax write-off. It's just a faster way to do it that they give you the opportunity to use outside of that 27 and a half years.